Hey guys, welcome to the Max Invest YouTube channel. In today's video, we're going to be looking at the big tech stocks and their earnings. Now, I really do believe the sky is the limit for some of these big tech stocks. I believe that even though they already have $2 trillion market caps, that they can continue to grow at an exponential pace, and their earnings show just this. Of course, there are many big tech stocks. These are the FANG stocks: Facebook, Apple, Amazon, Netflix, and Google. However, the big tech stocks that I'm most interested in are Apple, Amazon, and Google. In today's video, I'm going to explain to you why I'm most interested in these stocks, why I'm most bullish on these stocks, and how their earnings continue to grow at such a massive rate. Of course, if you enjoy the video, remember to like and subscribe to the channel, and remember, nothing in this video is financial advice and you should always do your own research. So, the first stock that I would like to look at is Google. Now, if you know Google, Google is one of the biggest companies in the world. Google has a $1.7 trillion market cap. Of course, we know why it is so big. Google has the search engine that we all use. It has a monopoly on internet searches. Google also has YouTube, one of the biggest streaming platforms in the world and one of the biggest video platforms in the world that continues to get more and more revenue. Of course, Google makes a lot of money from their advertisements and people watching their ads, and Google has Google Cloud, which also brings in a significant amount of revenue. Google is one of my favorite companies, and I do believe as the world gets more and more related to the internet, Google will continue to grow with this. Google has shown time and time again that even though its market cap is so high and it's over $1 trillion, it's nearly $2 trillion, it can continue growing, and their revenue is astounding and grows more and more. So let's take a look at some of Google's Q2 2021 numbers. These numbers are really good, and let's just have a look through them. Earnings per share for Google was $27.26 versus an expected $19.34 per share, showing Google continues to earn more and more, and it really does show Google's share price looks very, very reasonable and potentially even undervalued at these levels. Now, Google's revenue is $61.88 billion versus $56.16 billion expected. Google beat revenue expectations by $5 billion, which is an insane beat, and not many other companies can even do $5 billion in revenue in 10 years. Yet in just one quarter, Google manages to beat revenue expectations massively. YouTube advertisement revenue is one revenue stream that I'm very interested in. Of course, this is because I do YouTube myself. I don't actually make any money off YouTube because I don't have 1,000 subscribers, but it is very interesting to see what this advertisement revenue is. And as we can see, ad revenue for YouTube is $7 billion versus $6.37 billion revenue expected. Now, a lot of YouTubers have actually been saying that ad revenue is up to record highs, and this isn't even because more people are using YouTube. Of course, more and more people do use YouTube every single year. However, ad revenue is skyrocketing for a different reason. This reason is because YouTube has become better at targeting ads to people. If YouTube can target ads at a specific person even better, all this means is companies will be more willing to buy ads on YouTube. If more and more companies want to buy ads on YouTube, of course, the demand for ad revenue will go up, and the price for ad space on YouTube will also go up. As a direct result, we've seen record ad revenue, $7 billion in just one quarter. This is some insane growth, and right now, YouTube is competing with Netflix to be one of the biggest television companies in the entire world, which is great to see. Of course, we know YouTube also has Google also has Google Cloud revenue, which also beat expectations massively, and Google Cloud is something I'm very bullish on going into the future, and I really do think having a cloud platform for Google is crucial and fundamental to its long-term growth. Overall, if we look at Google's total ad revenue, which is $50.44 billion, we can see that this is up 69% from last year. That's right. Google, one of the biggest companies in the entire world, has grown its revenue by 69% year over year. Back in 2002, the early believers of Google wouldn't even believe that even though Google's hit $1 trillion market cap, it continues to grow at 69% year over the year. This means Google is essentially doubling its revenue every 1 and a bit years. Every 1 and a bit years, Google doubles the amount it makes, and it's the biggest company in the world. Of course, this is why I'm so bullish on Google, and this is why I do like to invest in Google for the long term. Now, another good company is Apple. Apple is one of my favorite companies in the stock market, and they have done very, very well. A lot of analysts really underdid Apple's expectations. They thought Apple would go pretty well, but they didn't think their earnings would be astounding. Now, the reason for this is because they underestimate the 5G supercycle. Every time Apple adds on a new G, a 3G, a 4G, a 5G, it goes better and better. Of course, all 5G means is that users will get better and better data for their phones, which should mean a lot of people want better data. They'll buy their new iPhones, and this will give them the better data, and as a direct result, Apple's revenue should go parabolic, and of course, it has done just that. As we can see, Apple's earnings per share was $1.30 versus $1.01 estimated. A big increase, a 30% increase off what was estimated, which is quite insane. Moreover, Apple's revenue was $81.41 billion versus $73.3 billion estimated. This represents a 36% increase year over year, which is an insane increase in revenue, and you don't see many companies beating their revenue estimates by $8 billion in just one quarter, which is what Apple is doing. Now, the most important revenue stream for Apple, in my personal opinion, is the iPhone revenue. Because, of course, Apple is having the 5G supercycle and iPhones should go a lot better. Now, another big reason for this was in 2019. Apple sold a ton of iPhones. However, in 2020, Apple essentially sold the same amount of iPhones. This showed essentially 0% growth in iPhone sales from 2019 to 2020. This wasn't very good for Apple, and I was a bit concerned. So I was really looking at Apple substantially improving the amount of iPhones that they are selling quarter over quarter from last year to show some really good growth from 2019. Of course, I was very confident this would happen because of 5G coming out throughout 2021. 5G is currently being rolled out and should be finally rolled out by 2022. And as we can see, Apple beat iPhone revenue expectations by $6 billion, representing a 50% increase year over year in iPhone revenue. Of course, this means Apple are essentially doubling their iPhone revenue every 2.5 years, which is completely insane, and it shows Apple are going very, very well. So, I was very happy with this. Of course, you can see Apple has a whole bunch of other revenue streams like service revenue, other products revenue, Mac revenue, iPad revenue, and gross margin. The one that I was most looking forward to seeing was their other products revenue. This is because Apple has a range of other products: Apple Music, Apple TV, essentially anything under the sun Apple has. They're even getting into buy now, pay later, and even considering electric vehicles. Of course, for Apple to get above a $2.5 trillion market cap and keep growing, they really need to expand into every single vertical, and to see their other products revenue grow by 40% year over year is very, very good, and I am very bullish on Apple because of this. So overall, Apple have done very great this quarter, and I'm looking forward to seeing Apple continue to grow at this insane rate. Now, Apple and Google have had some insane increases in their stock price because of their earnings. Their earnings have been very, very good, and their stock prices have gone up 10+% on the back of these earnings. However, Amazon, one of the companies I'm most bullish on, actually fell after its earnings. Now, this isn't because Apple's earnings were declining or Amazon's earnings were declining or anything. It's because Amazon missed expectations in just one metric. As you can see, earnings per share for Amazon was $15 instead of $12, which is pretty good earnings per share, and it shows they are growing very nicely, which is what I love to see. However, for Amazon, revenue was $113 billion versus $115 billion expected. This still represents a 27% year-over-year increase. However, it was slightly down from expectations, and the stock fell as a direct result. Now, in my personal opinion, I don't think this is very concerning at all for Amazon. Amazon is one of the biggest companies in the world, and as you can see, Apple was making $80 billion in one quarter, but Amazon is doing $115 billion. Amazon is the company that is earning the most money in the entire world right now, and Amazon is doing very, very well. Of course, you may know that Amazon has a lower market cap than Apple, and it has a lower market cap than Microsoft. The reason for this is because big e-commerce companies have a lot of costs, and as a result of this, their earnings tend to be lower, and as a result, Amazon's market cap tends to be a little bit lower, which does make a lot of sense. However, overall, $113 billion in revenue is very, very good in my opinion. And a 27% year over year in growth is very insane for Amazon. This shows a stack of growth, and it shows Amazon is not slowing down anytime soon. Inherently, COVID really did kick off Amazon's growth and e-commerce growth in general, as everyone was trapped in their homes, and Amazon grew by 41% year over year in 2020. However, a lot of people were saying, hey, Amazon's not going to grow anymore. Amazon have hit their peak, but 27% year over year still represents e-commerce is growing. Of course, not many people would think that a $2 trillion company would be able to grow 27% year over year, but it can, and I really do think Amazon will maintain above 20% growth year over year for the coming 5+ years, and I do see a very bright future for Amazon. So overall, this gets to the end of the video. These are my 3 favorite FANG stocks, and I really do love owning all of these. I preferably want to own an equal weighting of all of these stocks, as I'm equally as bullish on all of these stocks. I do think the sky is the limit for these stocks. These stocks can and will keep growing. I really don't think you can say, oh, Apple's going to get to a $4 trillion market cap and then that's it. That's too big. I really do think these companies will continuously grow, basically forever, and they'll get bigger and bigger and bigger. I don't think regulation can stand in the way of these companies, and I am very bullish on them overall. If you enjoyed the video, tell me your opinions in the comment section, and thanks for watching the video.